Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Welcome back to the India Fintech Diaries, your go to show for all things Indian fintech. I'm your host, Elroy.
And I'm your host, Hemant. Recently, the Reserve Bank of India Governor Shaktikanta Das, while speaking at the Global Fintech Festival, urged fintechs to establish self regulatory organizations or SROs themselves. And last month, during the monetary policy announcement, the governor also indicated that the RBI would issue an omnibus framework for SROs. But what is a SRO? And how would this play out in the fintech landscape in India? To discuss this and more, we have with us today Shivashish Chatterjee, co-founder, DMI Finance, and Jatinder Handoo, CEO, Digital Lenders Association of India. Welcome to Indefinite Diaries both.
Thanks, Elroy. Thanks, Hemant.
Thank you.
To begin with, it would be great if you could give our listeners a very quick introduction. Maybe Shiv, you could go first.
Thank you very much, Elroy and Hemant. Hi, everyone. I'm Shiv Chatterjee. I'm one of the co-founders of DMI Finance, which is a Delhi-based NBFC. We are regulated by the RBI and we are a digital lender. I'm also the chair of the SRO subcommittee at DLAI. Prior to DMI, I spent almost 15 years on Wall Street in New York. I was at Citigroup and I was co-head of Citigroup Securitized Products trading platform in North America.
Hi, I am Jatinder Handoo, CEO of Digital Lenders Association of India. I have close to 2 decades of professional work experience in banking and finance space. I have had my stints at State Bank of India, HDFC Bank Limited, Fino Paytech Limited, Mixed Market, and Microfinance Institutions Network, which is a RBI recognized self regulatory organization for NBFC MFIs in India. I'm a PhD scholar at Indian Institute of Management, Shillong, and a trained public policy specialist.
So, since Jatinder, you said you are an expert on policy frameworks and all. So let's start with the basics first, because some of our listeners might not be very familiar with the topic. So let's start with what exactly is a SRO or self-regulatory organization.
This has been a quite interesting discussion, and there are different, interpretations going around. Self-regulatory organization is not a new concept. It's a well-recognized concept, especially in the Western countries, especially in US. In India, with RBI already recognizing in financial sector two SROs in my NBFC MFI sector about 10 years back. SEBI has around four SROs. Well, basically, SRO is a non-government entity which helps to perform some functions like monitoring functions or any discrepancies pointed out by a regulator in that particular segment, and I'll restrict it to the financial sector. So if a regulator points out and asks a entity to conduct investigation and present a report to them about the non-compliance related things, that's a part two. But over and above that, it's not just monitoring and compliance thing. It's also about capacity building. It's about customer centricity. It's about ensuring responsible market conduct and helping industry to develop industry infrastructure to help them to comply with the regulations. So in nutshell, there are two pieces to an SRO. One, it's a non-government, usually a non-government entity, and usually it's an industry association to which a regulator recognizes. So two functions. One is the monitoring function, and there are different aspects to that, including the client centricity. And second is the sector building aspect. That, as I said, capacity building, helping industry to develop market infrastructure, and so on.
Understood, Jatin. Very helpful. So Shivashi is considering a practitioner in this market. Actually, the Indian financial sector is already quite regulated with about four regulators in play, including RBI, SEBI, IRDI, and then the pension regulator. So why an additional SRO would be needed in the financial sector?
So that's a very good question. And that's one that a lot of people are struggling with. I think the short answer is that the reason we need an SRO is that the fintech industry consists of not just regulated players who have existing financial regulators like the RBI or IRDA, but it also consists of a large number of players who are unregulated. And these
Right.
have been given they have been given a name in the latest RBI guidelines, like the DLG guidelines. They've been called TSPs and LSPs, but that's just a name for them to identify what their role in the ecosystem is. They remain unregulated. There is a complete patchwork of understanding and practices across the industry. Different players adhere to different philosophy of what their role is, and there is no uniformity in terms of how this unregulated ecosystem of TSPs and LSPs is supposed to come together and interact with the regulated ecosystem of banks and NBFCs to create the entire fintech industry. And so, in the absence of a unifying regulatory framework that allows TSPs, LSPs, and regulated entities to come together to form uh, a fintech ecosystem that everyone agrees is the fintech ecosystem, which is in the best interests of not just the industry, but in the best interests of the transacting public. In the absence of that, we do need an SRO, which is going to set down the guidelines that decide the framework in which this interaction is supposed to happen, so that we have the interests of all these players that come together appropriately handled. And in particular, we have the interests of the transacting public in terms of customer grievances and best practices for lending being addressed. It's very important, especially now with the Data Privacy Act in place, that the entire ecosystem approaches this with a unified method and comes together and agrees on what the best practices are. And that's why we did an SRO.
Jatinder, since you are leading a industry body, the Lending Association, it would be great to get your views as well on this particular question.
No, I think I'm in very much sync with what Shiv said. There are different form factors of institutions which are into digital lending, and and as I already said in as replying to your first question, an SRO has a broader role over and above just monitoring and surveillance part of it. Mostly when there's a discussion in media or in different conferences, people talk about the focus gets tilted towards the kind of a quasi-regulatory. But I would not like to use the word regulatory. However, it's mostly the surveillance or the monitoring part role of SRO. However, there's a large enabling role, because even if we look, these technologies move very fast in fintech, and especially when we look at the digital credit in this country, the speed has been, the acceleration has been there for since COVID, post COVID. 2016 it started, 15, 16 it started, picking up, and then there was a COVID which kind of accelerated it. And this is a growing kind of a industry. And in this growing kind of industry, you need an equal balance of regulation and kind of a self-regulation. And I would like to put more stress on, self-regulatory and enabling part, as I said earlier, the trainings, capacity building, developing market infrastructures. And when I say developing market infrastructure, one of the examples could be, just like in, as I mentioned previously about NBFC microfinance industry, when there was a beginning, there
Right.
was not even a dedicated SRO for NBFC MFI. So they got together and got a CIC for themselves. Similarly, in digital lending space now, it is the biggest menace is unauthorized lending apps. So a common platform to tackle this menace of unauthorized apps, and then having all relevant players, be it from law enforcement side or regulator or relevant departments of government and other stakeholders, including customers. So someone needs to come up and cobble up this coalition and drive and an individual can't do it, be it an entity or an individual public policy entity or a regulatory body. So someone needs to anchor this together, and that there is where comes the role of a dedicated SRO. So these kinds of functions which are required for entire industry, and for that an SRO is very, very pertinent and important.
In early October, the RBI governor announced an upcoming omnibus framework for SRO in his monetary policy speech, as both of you must have noted, right? From your point of view as fintech leaders, what do you think, or what are you expecting this framework to contain, which is due to be announced?
So I'll take a stab at that. So again, as I said earlier, and Jatinder reiterated, right? We have a plethora of guidelines and regulations that have come
Right,
out, and the prime ones from the digital lending perspective are things like the Digital Lending Guideline and the Data Privacy Act, right?
right,
Now, what these pieces of communication have and legislation have done is that they have set out some kind of a broad framework, but there is still a reasonable amount of ambiguity. And there is a reasonable amount of interpretation that needs to go into what exactly does the DLG mean and what exactly does the Privacy Act mean for individual players.
okay,
And today, what happens? Well, a couple of things happen. The regulated entities, NBFCs and banks, are obviously answerable to the RBI, right? The unregulated entities are not answerable currently to anyone, right? So, at best, what the RBI can do is wrap the knuckles of the regulated entities and tell them that, listen, your partners in this journey, the LSPs and the TSPs, whatever, whoever they are somehow not living up to the standards of what the DLG is supposed to be and what the Data Privacy Act is supposed to do, right? There
right,
is nothing where these entities can be directly told except through the law, right? So as Jatinder said, predatory lending, unregulated lending has been a large problem and one of the driving factors that has led to this discourse on self-regulation. But despite the fact that we have predatory lending apps, there is no recourse for how to address them except through voluntary action by entities like the Google Play Store and through actual criminal prosecution through entities like the Enforcement Directorate and the law enforcement community.
correct,
So, what we really need is some kind of a unifying body that does two things. One is it creates efficiency of scale by having a consensus interpretation of what these new regulations and new guidelines mean for the interaction of regulated entities with unregulated entities,
right,
right? So once we have a unified interpretation which everyone can sign on to, then each individual regulated entity and TSP and LSP doesn't need to go out and spend money in hiring legal counsel to do their own local interpretation, right? They can
okay,
simply refer to this SRO entity and say, well, this is what has been decided by the industry, this means. And they can then adhere to that. And if for some reason the regulator disagrees with that interpretation, then the regulator has a single point of contact with which to make changes to how the industry is approaching it.
right,
Right? Today, if the regulator disagrees, there is no forum in which the regulator can go in and in one stroke tell the industry that, guys, you're getting this piece wrong. This is what we really intended. Please fix it. Right? It becomes a
right,
bilateral conversation, and that is highly inefficient for the industry and for the regulatory framework. So I think that is a large piece of what we are hoping is going to get solved through figuring out how this SRO is going to get set up, who is it going to represent, and what will its interaction be. Now, just to be very clear, right, an SRO doesn't need to be recognized. We don't really need
correct,
an RBI or a SEBI to tell us that this is what the omnibus definition of an SRO is going to be. Right? An SRO is just a collection of entities who have a common goal and a common theme, voluntarily submitting to a set of regulations that they come up with themselves. And they decide that we as a group are going to submit ourselves to this code of conduct or this way of approaching business so that we can build the trust of the regulator, we can build the trust of our of our clients, and we can have efficiency of scale. And as Jatinder said, we can build out capacity for the industry to grow. And that doesn't require any external body or any regulatory authority to give its blessing. Now, in this case, what we are hoping is that in addition to the fintech industry organizing itself around a common set of principles, what we are hoping is to get the blessing of the regulator that these common set of principles that the industry comes up with are consistent with the goals of the regulator vis-a-vis the regulated entities and vis-a-vis lending or growth of lending in India in general. And once we get that, which is where we hope that the framework that the RBI comes out with is going to reconcile the goals of the regulatory body and the government as far as financial inclusion is concerned, as far as customer protection is concerned, and general best practice is concerned, reconcile those with what the industry wants to achieve in its own the self-regulatory framework.
Jatinder, would you like to add something to that as well?
Yes, I would like to add small pieces to what Shiv said. Look, from the business standpoint, the way fintech, if you look at the overall fintech and the growth numbers, there's a great potential, and as per one of the studies conducted by, I think, IIFL, they have mentioned that the sector is going to grow by 1.3 trillion US dollars fintech in India by 2030, and out of which about 515 billion would be digital lending, which itself meant gives an indication how fast this space is going to move on. Now, two pieces, there are entities which are directly regulated by Reserve Bank of India, NBFCs, primarily NBFCs and banks, small finance banks, payment banks, so on and so forth. And second are entities which are, which act as agents of principal entities. So principal entities being prudentially regulated, and agents being one those who have registered as a company, but may not necessarily be directly regulated by Reserve Bank of India. However, they follow all rules and regulations which are applicable to the principal entity. And principal entity, which is a regulated entity, is responsible to make sure that all regulations are complied by the entities, these agents. So this is part one. And when we talk about, there are another set of entities in ecosystem which are like free riders, or free radicals, we can say, which are involved into on a activities like unauthorized lendings and so on and so forth. So we need to understand this
Right.
distinction is the one. On omnibus regulation, I think what we envisage, and since as I said, the broader piece, when we say fintech, it's the application of technology for delivery of financial services, in a simple words. And in fintech is a huge kind of a onion kind of a structure where you have payments, you have digital credit, you have insurance, you have wealth management services, robo advisory, so on and so forth. However, the large pieces of fintech in India, if we look at data, also tells us this payments as well as digital lending, and both are different products and services as far as delivery and different contours are concerned. So as far as there, we look for a omnibus framework from the standpoint of customer centricity, transparency, responsible market conduct, and having an effective customer grievance redress system. So this is as far as the common contours are concerned. But since both activities are different, so we look forward, and this is our expectation, that RBI comes up with a activity based SRO, which means that SRO, right now there are different discussions going on in the ecosystem whether there will be one uniform SRO or there will be different SROs for different entities. But at least, what experience tells us and what precedent tells us, from the past also, as I earlier mentioned about two existing RBI recognized SROs in NBFC MFI space. So we expect, an activity based dedicated SRO for lending sector, which of course covers principal entities and the agents, the LSPs part both. And then As I mentioned, the aspects like CGRM, which is very pertinent. How you what mechanism an SRO has to address customer grievance redress, redressals or whatever grievances are there. Another piece, which is very pertinent for a SRO is to, as I mentioned earlier, it's a standard setting body, and then as a standard is for its members continuously, time to time, based on the situation or based on the assessment of the field, it issues advisories and directions which are adhered to by a majority of its members, and in fact all of its members. So quickly, recapitulating again, activity based dedicated SRO for digital lending, and of course focusing on the important elements, which is the client centricity. And in fact, I would go a step further and like to mention here, although it's a member promoted body, the members of a digital lending industry come together and then they form and they support this body for the larger good of entire industry. But largely, it should be seen as a public good entity, which kind of provides support to and takes care of the grievances of customers, and synchronizes along with the public policy agenda of regulators as well as for the government.
So if I can just add a little bit to what I said earlier, and I think Jatinder highlighted this as well. Given the interconnectedness of the digital ecosystem in India, especially now that you have India Stack account aggregator and all of this stuff coming together, you have two kinds of issues emerging. One is that historically you have had a bunch of regulated entities that have operated in their own sphere. So banks and NBFCs have operated in their own sphere, regulated by the RBI. You have insurance companies, etc., that are operating in an IRDA framework. You have wealth management companies and people who are in stockbroking and so on, who are governed by SEBI, and they have largely operated in their own bubbles without a lot of overlap. But now
Right.
with the digital economy and India Stack, all of these regulated entities are coming up against each other, right? So there is a decent amount of overlap in the way these companies are starting to come together. So maybe at some point, either we need much greater coordination between the different regulators for this piece of the ecosystem, or
Right.
maybe we need some kind of a super regulator that goes across all of these regulators and figures out how to regulate a company which is operating across all of these frameworks, right? Now, in
Yeah.
addition to that, in these spaces, you have a bunch of fintechs, and these fintechs are, helping the regulated entities lend, helping them build wealth management businesses, helping them build insurance businesses, and these do not have any regulator at present, as I think I've said that a number of times. And so there are, again, really two solutions to that, which is either you bring them within the formal regulatory framework, or you allow them to
Yeah.
self regulate in a way that leaves the regulator comfortable. Now, bringing them into the formal regulatory framework would mean that in the fintech lending ecosystem, TSPs and LSPs would now have to become RBI regulated. And
Okay.
in the insurance ecosystem, TSPs and LSPs who are helping insurance companies expand their business would have to become IRDA regulated. And similarly, in the wealth management system, the ecosystem, they would have to become SEBI regulated. And that, I think, puts a fair amount of burden on the regulatory framework. The RBI, as we know, even today, has far too many entities that it needs to regulate, right? More entities
Yeah.
need to be regulated by the RBI than the RBI has capacity to regulate on a regular basis, right? So I don't believe that of the thousands and thousands of NBFCs there are, more than a fraction of them are audited by the RBI every year, right? Only a handful of them get audited every single year. And adding to the regulatory burden by increasing the number of categories that the RBI now needs to regulate directly, is going to make the ecosystem more cumbersome and is going to lead to a loss of efficiency and a loss of innovation. The SRO approach and the SRO roadmap helps us get around this in a way that is hopefully continues to be conducive to growth and conducive to customer safety. And I think that's a piece which we are all hopeful comes together in a way that is blessed by the regulators.
I think a quick follow-up question to this, Shiv and Jatinder, is that are there any global precedents where this kind of an SRO framework has actually worked well? And if yes, what can we learn from these kind of global precedents?
So I think, I mean, from my perspective, and Jatinder is going to have his own perspective coming from a deep SRO background. I live in the US. As I said, I spent almost 15 years on Wall Street, and Wall Street is largely an SRO. So today, the regulation of broker dealers in the US is done by FINRA. And
Right.
FINRA is an SRO, right? So FINRA does not have any power to basically prosecute people. All it has is a power to lay down the guidelines and hold audits and ensure that its membership adheres to the guidelines laid down. And as a result, the membership can list themselves as member FINRA. Similarly, the New
Okay.
York Stock Exchange is an SRO, right? And maybe one of the largest SROs in the world. And it says member NYSE. Now, when a company puts out on its, on its letterhead or, at its office, it says member FINRA, that has a connotation. And anybody looking at it basically can conclude that, okay, this means that a basic level of hygiene in terms of how the business is conducted, in terms of what are the guidelines that are adhered to, what are the regulations that this company lives by, and where do I
Right.
go? Where do I go as an individual if something goes wrong? All of that is encapsulated in member FINRA, right? Similarly, exactly the same thing for member NYSE. We have to keep in mind that individuals, right, be it highly informed individuals or low financial education individuals, it doesn't matter. Individuals really do not have the capability to conduct the level of due diligence that would be required in the absence of either a fully regulated ecosystem or a self-regulated ecosystem. Right today, when we say that, oh, there are so many digital lending apps and they are predatory lenders and they are taking advantage of the people, we can't really blame the individuals because we are telling the individuals that they have to do their own due diligence when they see an app on the Google Play Store, and they have to decide whether it is a trustworthy app or not. Now, in this case, what happens is that in the mind of the transacting public, the Google Play Store itself is acting as some kind of a regulator, right? The fact that an app in the Play
Right.
Store is in the mind of the individual a stamp of approval, right? And so they're saying, oh, this is on the Play Store, so I can use it, and they are saying they will lend me money, and that means it is safe. It turns out that is not the case, right? Google Play Store is not acting as a regulator. They can do their best
Correct.
to prevent fraudulent apps getting on the Play Store, but one, I don't think there is a legal requirement that they do so, and two, they are not the best people to do that because they are not experts and they are not real players in the field of digital lending. So who are the best people who can come together and decide how to give this stamp of approval, right? This stamp of approval that says, you know, whatever, member DLAI or member this SRO, that then informs the transacting public that this is a trustworthy place to go. The best people who are positioned to do this are the industry insiders, right? It is the members of DLAI, it is the members of other industry bodies who are involved in this day to day, week to week, who can then say that yes, when we say that this entity or this app is put out by a member of by one of our membership that carries a certificate of authentication. And I think that is the piece which, or one of the very critical pieces of pushing this industry forward.
Understood. Understood. So, Shiv and Jatin, we have spoken about the benefits that would come when you adopt something like an SRO. But then there are pockets which are also voicing an opposing view. So, I would just like to bring in one of those views. So, Amarjit Singh, a whole time member of SEBI, said that financial misconduct and fraud in the absence of adequate regulation is a recurring pattern in the industry across the world. The principles of self regulation, or the belief that the market will take care of itself, does not work really well. So, Jatin, I just wanted to get your views on how effective do you think an SRO would be? And we have spoken it at length, but it would be good to enumerate that. How effective do you think an SRO would be in combating fraud and mis-selling as far as the digital lenders and also the associate LSRs and TSPs are concerned?
I think this is a one section of population, or one section of experts think about this. But as I mentioned earlier, SRO plays a very determinant and very important role. And the trust and the authenticity of SRO comes over a period of time, and there are different elements. I would like to highlight specifically here, and what even RBI expects it. The kind of governance which SRO has. What is the level of independent governance which SRO has? What is it away a kind of a one arm distance from individual members? Although it is supported by all members collectivity, so it should be one at an arm's length. So that kind of a principle. What actions an SRO has taken against the non compliances, or whatever have been there in the field. The mechanism for customer grievance redressal mechanism, and also dispute resolution among different players. The kind of thought leadership it has, and kind of the record which is had. I think all these things combined together, constitute and trust factor. So regulations are absolutely important, and we must understand this thing very clearly. SROs are not a set of institutions which are going to, replace, or it's not either or, zero or one. Regulation is always there, and it will be there in an India kind of a country where we have regulatory is a very strong and very, I would say, a very enabling regulatory regime here with the Reserve Bank of India as far as BFSI, banking and financial services, are concerned. But then there is a complementary role of SROs, and SRO can play a very pertinent role by acting as a initial line of defense. And when you asked me about the frauds and unauthorized lending apps, as I mentioned earlier, if there has to be a common platform to bring all relevant stakeholders, right from bureaucracy to ministry to regulators to NGOs and civil society actors, and market players and customers together, and play and develop an intervention which probably DLAI is looking into in coming weeks. So there is the role of an SRO. No individual entity can do it in an individual capacity, because of their multiple, they have their own mandates and functions to perform. An entity like SRO can do that, and then hence prevent financial frauds or minimize them. So this is a role, and as she aptly mentioned previously also, the stamp of approval thing. And this stamp of approval also comes up when the conduct of SROs is also very important. Over a period of time, how SROs perform in a particular industry, it is also very important. And over a period of time, when they meet certain criteria set up by societal watchdogs or industry and media and regulators themselves, those who perform well, they are seen in a very reputed way, and then the trust emerges. So, but in nutshell, the trust is the aggregate factor of the kind of governance you have, the kind of decisions you have taken. If you are at one arm's distance, and as I mentioned previously, although it is supported by industry, it should be seen as a public good entity for the larger public policy goals.
Thanks so much for that, Jatinder. I think one other question that I had was, as industry leaders, right? what do you think some of the inhibitions that other industry players might have about SROs that might actually hinder adoption? So are industry players going to be apprehensive of adding more layers of compliance by taking part in SRO, or would this be a relatively smoother adoption in your view?
If you ask me, I would, from my previous experience, I would say that this should be mostly welcomed by industry players rather than an additional layer of compliance. Because as I earlier said, the job it's
Yeah.
just an additional support to a regulator. You can't, the compliance comes from the regulations which RBI comes up. Here, it's as I mentioned initially. Also, there is more of an enabling role which an SRO plays. So SRO should not be seen as someone who comes with the cudgels down and there's a non-compliance and will fine you or something like that. No. So basically, SRO comes and helps to build capacity, helps them to handhold its members to bring along the trajectory of a regulatory compliance. So in a way, it is helpful for industry, and industry should not, it's nowhere, I don't see it's as an additional compliance requirement, but it's a supporting infrastructure or supporting agency which helps its members to come along the way you look, the way, even if even for NBFC MFI industry, which was on the brink of collapse after Andhra Pradesh crisis, and Khan committee report came up with the idea of industry SRO, and RBI immediately, recognized two industry associations, one after another, of course, as an SRO. And about 6 years after that, we see how industry transformed itself. From there were different entities which transferred from NBFC, MFIs to small finance banks, and even to the universal banks, which only shows progression with the support of an industry association and the SRO piece. So, in nutshell, I would say it should not be seen as a compliance requirement. However, it is an enabling infrastructure which is there with an industry to help them to meet compliances, and to have an industry infrastructure in place, things like that. So that's what I have to say.
Yes, I would agree with that entirely, and I would also add a couple of things. One is I don't think it's a viable position for anybody in the fintech ecosystem to say that we do not want to be regulated, because lending is a
Right.
regulated and is a regulated activity in India. So if you are somehow connected to a regulated activity, you will be subject to some kind of regulation. Now, how that regulation affects you is going to differ in different states of the world, right? So it is not a viable position to say that we don't want to comply, we don't want to be regulated. So now, what are the choices that we have as an industry? The choices that we have are either the RBI takes on the entire burden of regulating everyone, including software companies, TSPs, LSPs, people who are providing support services to the industry, and that I think is going to be extremely cumbersome. The other is an SRO, right? Today, what happens is that a large part of this ecosystem does not have a voice in how the industry is moving forward, because they do not have a formal regulatory body either through an SRO, and they are not directly regulated by the RBI, so the RBI won't talk to them. So they don't have a voice today, and yet there is without a doubt that they have to comply with the laws of the land, and they have to comply with the best practices of customer protection. So I don't see how there is an alternative to either becoming regulated directly by the RBI, or having an SRO where you have where the industry comes together and puts together what it thinks are best practices. Now, in any of these cases, as Jatinder mentioned earlier, an SRO does not supplant formal regulation. An SRO doesn't change the fact that all the participants in this ecosystem are subject to the laws of India. So I think I'm going to go back to the earlier question you'd asked in terms of, there are some people who say that an SRO is not going to be helpful. I think an SRO is going to be very helpful, because it is going to streamline how the laws get applied. So if there are bad actors, then the SRO becomes the first line of defense. And if the SRO can't solve the problem, which seems to be the concern, then that problem gets referred to the law enforcement agencies and to the regulators. And we've seen that happen as well, where the police, the enforcement directorate, the cyber cells, they have all had to get involved eventually. And hopefully with an SRO, the role of those entities can become more streamlined so that it becomes a more effectively policed ecosystem than it is currently.
Yeah, I think a small addition to what Shiv said, and this is time and again, reinforced by different committees. And recently, in July 27, there was a standing committee report, Ministry of Finance's standing committee report on cyber crimes, which also highlighted the fact that there is a paucity of coordination in order to control, these crimes which happen on unauthorized lending apps. In fact, it also mentions that an SRO approach would help. So that is kind of a reinforcement. Part two to this is, of course, there will be regulation. And in fact, the digital lending industry is still in a nascent stage if we consider today. As per one of the RBI reports, it was mentioned very clearly that in 2000 the working group report, it mentioned that the volume of loans channelized through digital channels by banks was 6.04%, whereas NBFCs, which largely means digital ones, was 53% approximately. The value which was channelized by banks was roughly 2.07% vis-a-vis 10.87% by NBFCs, which clearly shows the speed at which digital lending is happening, but still it is minuscule, it is low. And each state in this country, law and order being a state subject, and in fact there is something called state level. Each state has its own money lenders act, and beyond the
Right.
point, once you grow so big and you become too visible, and if you are not regulated or self-regulated, some state government is going to come harder and find out a way to bring hurdles, as the hurdles and difficulties which microfinance saw in this country a few years back. So the regime of self regulation is something which is enabling. It helps entities to grow up to a trajectory and comply with regulations, and also takes care of the systemic issues like unauthorized lending apps and client education, cyber protection, and so on and so forth.
I think if there is a legitimate concern, one
Right.
legitimate concern that I can think of where somebody who is currently not regulated at all and is looking at an SRO and saying, well, I don't know about that, right? One legitimate concern I can think of is fairness of representation,
Okay.
right? As in, if you are an unregulated entity today and now you are going into an SRO and you are worried that the SRO is not going to be even handed in how it portrays the interests or how it represents the interests of the different players in the ecosystem, and you do not want to be a party to signing off on something or being seen as having agreed with something that you feel is patently unfair to your role in the fintech ecosystem, then you will have some misgivings about joining this, right?
Right.
But I think that can only be solved through dialogue and through actually being present at the table, right? You cannot solve it from the outside.
Correct.
So the only way you're going to redress that, only way you're going to reach some balance where everyone is comfortable with the representation of this SRO for the different players is by all the players being present there. And so I don't see how not joining is going to help your cause.
Thanks a ton, Jatinder and Shiv. This was a very interesting conversation that we've been having so far on SRO. It was indeed a pleasure to have you on the show. Thanks for joining us.
Thanks so much, Elroy. It was pleasure talking to you. Thank you.
Thank you. Thank you, Hemant. Thank you, Elroy. My pleasure.
That concludes another episode of India FinTech Diaries. Remember to visit our website, indiafintechdiaries.com, for exclusive content. Until next time, stay safe and keep exploring the world of fintech.